Hello and welcome to Edison TV Executive Interview Series. My name is Oliver Haslam and I'm a director in Edison's healthcare team. I'm delighted to be joined today by Richard Barfield, Chief Financial Officer of Ergomed plc. Listed on the AIM market of the London Stock Exchange, Ergomed operates with a global footprint in over 100 countries and is dedicated to the provision of specialized services to the pharmaceutical industry and the development of new drugs. Richard, welcome. Firstly, can you please introduce Ergomed and its business segments?
Ergomed is a fast-growing UK-listed healthcare company. We're listed on the AIM market of the London Stock Exchange with a market capitalisation of around £270 million. We employ around 1,000 people in 16 offices around the world. We provide our pharmacovigilance services to our clients in over 100 countries around the world, and we provide our clinical trial services to our clients in 60 countries around the world. We have two main divisions. The first one is pharmacovigilance. This provides drug safety services to large pharma, specialty pharma, and biotech companies. And the second one is our clinical research division, our CRO business, which provides clinical trial services to pharmaceutical companies on a global basis in the specialist areas of rare disease and oncology. We are a financially strong company. We're debt-free. We're growing rapidly. The market this year is expecting us to produce revenues of around 85 million and an EBITDA of around 17 million.
You released a trading update recently. How was the performance in the first half of 2020, and what are your expectations for the rest of 2020?
A recent trading release covered two key areas. The first one was our performance in the first half of 2020, and if we look at that in comparison to the first half of 2019, what it shows you is revenues overall up 14.8%. Service fee revenues were up 18%, and that included a revenue increase in our pharmacovigilance division of 62.1%. In the CRO business, which was slightly affected by the COVID-19 crisis, revenues fell by 6.7%. But it's important to emphasize that our sales performance was strong. We achieved our first half 2020 sales targets. Sales were up 22.9%. And that increased the size of our order book, which is the future delivery of our profitable and cash generative revenue streams. That increased by 22% to £151.4 million. So overall, a strong performance. In fact, in the announcement, we described it as an excellent performance, and I think that's a fair statement. We also talk, secondly, in the statement about the outlook for 2020, and what we said about that was that we expected to materially exceed the then current market expectations, as a consequence of which the EBITDA outlook for the year was increased from 15.4 million to 17.0 million. So overall, an excellent performance and demonstrating our resilience as we went through the COVID-19 crisis, and continuing our momentum as we go into the second half of 2020 and beyond.
How has the COVID-19 pandemic affected your business?
Well, I mentioned just a moment ago that our contract research outsourcing, our CRO business, was slightly affected, so the revenues were slightly down. That business represents around 1/3 of our company, our total revenues, whereas the pharmacovigilance business increased very strongly by 62.1%. So overall, we have shown a strong level of resilience as we have been through the second quarter of 2020, when this COVID-19 crisis was at its worst. We're starting to see the lockdown ease in certain places. We're starting to see that the CRO business is now picking up again. Access to sites and to patients and investigators is increasing. So that revenue that we did not make in the first half should start coming back in the second half of 2020, and as we go into as we go into 2021. We have transitioned all of our staff to remote working, so we have about 1,000 people working remotely, and we've seen no discernible decline in our productivity and efficiency. So overall, I think we've coped extremely well, and we've shown great resilience through the COVID-19 crisis. What we've also done over and above that is a certain amount of work in the COVID-19 area. So you've seen us announce publicly new work that we have taken on in places like Bergamo and Milan in northern Italy, at the epicenter of the COVID-19 outbreak in Europe. And at the same time, we have taken on some pharmacovigilance work in the drug safety area relating to COVID-19 out of our new PrimeVigilance business in the USA, in North Carolina. So we have demonstrated that we have the speed, the flexibility, the expertise, we have a strong patient recruitment model, and those have really helped us through this COVID-19 crisis. So overall, I would say we've demonstrated strong resilience, and we expect to continue with our growth momentum as we go into the second half of the year.
This year, Ergomed's total revenues will be almost double those of 2017. What were the reasons behind such growth, and is it sustainable?
Overall, the CRO market in which we trade is scheduled to grow at 6% per annum through 2022. So the starting position for us is that we are in a business which is already, we are in a market globally which is already growing. Over and above that, the specialist areas that we focus on are growing at a faster rate than the overall market. The amount of outsourcing in the biotech market, which we focus on, is scheduled to increase from 66% to 77% over the next 3 years through to 2022. Oncology is growing at 9% per annum. Rare disease research is growing at 11% per annum. And the pharmacovigilance market is growing at 16% per annum. So the specialist markets that we focus on have an overall stronger growth rate than the market as a whole. And I think that will certainly support our continued growth. We have demonstrated since the company IPO'd in 2014 that we are continuing to grow. So the compound annual growth rate over the past 5 years has been over 22%. In 2019, it was 26.1%. So the specialist service that we offer as a leading global independent provider of specialist pharmaceutical services, that specialist service, I think, makes us attractive to the faster growing markets of segments of the market, such as biotech and specialty pharma. And I think that will help us to maintain and continue our momentum as well.
Could you talk us through your M&A strategy?
Well, M&A, we do expect to be an important part of our strategy going forward. We've already demonstrated that we know how to do transactions. We acquired a business in January of this year, which is now PrimeVigilance USA. That has worked extremely well for us. It's helped to deliver the growth in the pharmacovigilance business and has extended our geographic reach into the North American and indeed global markets. So extending our global presence, I've just spoken about the USA, but the same could be said for Asia, is going to be an important plank, an important part of our M&A strategy. At the same time, we're keen to strengthen our offerings in our selected markets. So therapeutic area specialisms, additional services such as enhancing our patient recruitment capability, those will also be a part of our strategy. But I will just emphasize that whilst it's great to be opportunistic, and we'll certainly keep our eyes open, and lots of opportunities are coming across our desk, as you can imagine, it's important also to remain strategic and disciplined. We will not overpay. In the current market conditions, it's difficult to originate and conduct transactions for obvious reasons because of restrictions on travel and so on. So we will also look over the second half of this year, and you'll see this come through in our numbers, some increased investment in our organic growth, particularly in the areas of productivity, efficiency, and technology.
And finally, Richard, what news flow should we expect from Ergomed in the near term?
No surprise really in terms of the scheduled news flow. So in September, mid-late September 2020, we will publish our interim results. So that will put more flesh on the bones as far as our first half 2020 performance is concerned. So we will go into more detail around our growth, our momentum, our strong EBITDA over the first half of the year, and our strong financial position going into the second half of 2020 and beyond. And that will be in late September. In January 2021, we will issue a trading update. So this will be a first view of the results for 2020 as a whole. And we will typically, as we have done in the past, we will comment on areas such as revenue, order book, cash position, and so on. And then the full 2020 results announcement will come along later in the year, in March 2021. So those are the scheduled announcements. Over and above that, if there is any news on the M&A front, we will of course announce that.